Okay, in the interest of giving enough time to get through the entire deck, we have a lot to get through today. We'll go ahead and get started here. My name is Aaron Higgins. I will be your moderator today. So if you have a problem or a question, go ahead and feel free to shoot a message to me right in the chat. We will be recording today's meeting. In fact, I just started the recording, so you'll have an opportunity to go back and re-watch. We will also be posting a copy of the recording and the slide deck to our website, which is shpllc.com/webinars. And you may have noticed you are currently muted. You will remain muted throughout the presentation. So if you do have a question, go ahead and put it into the aforementioned chat. If you really need to ask your question out loud, go ahead and raise your hand. Digitally speaking, if you raise it in real life, I won't see it. No one will see it. But if you raise your hand, we'll go ahead and unmute you. And there'll be an opportunity for questions at the end as well. So with that being said, I'm going to hand this over to Kelly. Kelly?
Great, thank you so much, Aaron. If we could move to the next slide. So what today is primarily going to be is a walk through the portal. We know that there are some providers well familiar with the PRF reporting portal and the usage of your funds, but there are some new FAQs to talk through. And we do have a subset of providers who didn't receive any money in the initial time period and are queuing up for their first reporting cycle now. So we'll talk through some of the nuance of that. Real quick to start, we do have some news on the Provider Relief Fund in general. So news release came out this morning that Health and Human Services is issuing another request for $30 billion in additional funding. But the important caveat there is that none of that is intended for downstream provider reimbursement, similar to the targeted and general distributions that we've seen. HHS is primarily going to be using that money to fund additional testing capacity, antiviral medications, as well as replenishing some additional funding into the COVID uninsured portal, where providers can submit for reimbursement on treatment to COVID patients that have no insurance. That really ties into the second point. We had sent a notification out that funding pool did appear to be running dry. They've distributed about 17 billion in funds to date, and it's estimated that they're down to 7.6 billion left to distribute. You guys know, as Omicron continues to be impactful, particularly amongst hospitals and inpatient stays, that it's still very relevant and still seeing patients that are uninsured that need that treatment. Next slide. So before we start the portal walkthrough, there have been some FAQs that were issued between the end of the first reporting period, which had to be in by the end of last year, and the second reporting period for funds received from July 1, 2020 through 12/31 of 2020. And so, if you reported in the first period, have additional reporting in the second period, one of the FAQs addresses, can you use a different lost revenue methodology for each period? And so HHS is indicating that yes, you are available to change that lost revenue methodology. But because there are overlapping periods of availability, if you update for the second reporting period, it will recalculate your first submission to the same methodology that you were proposing to use in the second period. Additionally, if there's a change in that methodology, you will have to submit a written justification to support and explain why you've changed methodologies between your first report and your second report. Aaron, next slide. And so next question, in subsequent reporting periods, will reporting entities still be able to change the lost revenue methodology? And the answer to that is yes. As we look towards future reporting, for instance, reporting for funds received now will be going through 2023. And so, but similarly, it will recalculate your previous submissions with the new methodology that you're choosing to use. Next slide. Critically, if you're looking and considering a change in methodology, could it impact the justification, and could funds be due back if you're choosing a different methodology? And the answer is yes. If HHS recalculates any previous submissions based on a new methodology that you're choosing, it could result in funds being due from previous reporting periods. Next slide. This is again for people who have reported already in period 1, getting ready to report in period 2. If any funds were due from that first period of reporting, and you do not see them reflected in the payments to recipients page in your PRF reporting portal, you will need to call HHS to have that updated, because they will need to see that offset prior to your completion of this period of reporting. So obviously, as Erin said, the slides will be available, but they're providing the steps on how to go about ensuring that that's reflected and that HHS has recorded any repayments to them. And then another question that had come in, if a overpayment is made and you return funds in excess of what is actually owed, will HRSA repay you that difference? Unfortunately, the answer is no. If additional funds are returned to HRSA in excess of what was owed, unfortunately, that money is going to stay with HRSA. Mike, anything to add before we get into the reporting tips?
Nope, go for it.
Okay, so the timeline that we're working on now, reporting has to be completed by 11:59 p.m. Eastern Time on the last day of the reporting period, which is March 31st, 2022. Unlike our first period, HRSA has made no indication that there will be a grace period for reporting, so that is the timeline that everyone should be working under. You can only submit electronically. As a reminder, it's a two-factor authentication, and so the process will always involve emails coming to you to authenticate that it's actually you logging into the system. The report doesn't have to be completed in one sitting, but each step has to be completed in order to save your data entry into that particular step. And so as you're going through the process and as we talk through the steps, it's really, if you need to walk away, finish the step that you're working on, save and exit the portal. Because otherwise it won't let you save with empty fields, and you'll lose whatever data is put in up to that point if you log out. Another key note, a work session in the PRF portal will time out after 15 minutes of inactivity. So if for any reason you're called away in the middle of a data entry, it will log you out, and none of the entry in that particular step will be saved if the system logs you out. And so, can we go back? So last key, and this is really, from what we've seen up to this point, we have not yet seen any audits come through for period 1 reporting. And so, to consider, future entry submissions as well as potential audits, it is crucial to save all of your supporting documentation for revenue and expense inputs. Because again, there's going to be overlapping periods where you may be entering 2019 data multiple times throughout your submission. Matching, ensuring that all of those match through all of your periods of submission will be critical, as HHS has noted that any discrepancies in reported data for the same time period will increase the likelihood of audits. So just really critical to keep all of that together for future reporting periods and any potential audits of the submissions that have been made. Next slide. Okay, so next few slides are really just some key tips about working within the portal. Your pencil icon lets you amend the data input into a field. Trash bin icon, you can click to delete any data in a particular field. Next slide. And so after you successfully log in, you'll be able to navigate the portal through a series of pages. We'll go through what the order of those, and your overall progress can be observed by viewing the progress bar located at the top of each portal page. Blue circle, completed. White circle, what you're working on now. Gray circle is yet to be completed. Next slide. So we talked about the saving option, and if you click on the previous button again without completing and saving the slide that you're working on, you will lose any data entry up to that point. And so the portal is always going to reopen on the entity overview page, and you can toggle to where you've completed to restart the submission. Next slide. And critically, the backwards and forward navigation in your web browsers shouldn't be used to navigate between steps. They provide buttons to navigate. If you use those buttons again, it's likely that the system will lose whatever data you've put in and have not saved to this point. So always use that save and exit or save and next in order to move between the pages. Next slide. Resolving error message, as we've said, that it won't let you move between pages, move forward until you complete a particular page. And so if there are error messages or missing information, it will highlight them in red, what needs to be completed in order to move to the next section. Next slide. And first up, obviously, clicking that you accept the terms and conditions. For existing reporters, I believe that this step would already be in the system. If you are a brand new reporter in this period, this will be a step that you need to complete. Next slide. So now we get into the actual steps and walking through. So this is what you'll see logging in. It's going to be your entity overview. Next slide. And so here, your TIN is going to be pre-populated. Your business name is going to be pre-populated. What you will need to complete are your provider types and provider subtypes. Pre-populated fields cannot be changed, but you can add a DBA name if applicable. Next slide. So provider type and subtype, you'll use the drop-down menus to select the relevant one. Again, select the combination that best describes your type of business. And then after the entity overview, the address as it appears on your W-9 and contact information sections will show. And these will be fields, again, pre-populated from your registration into the portal. Critically, if anything has changed since registration for your address, although it's pre-populated, you will be able to update that within the system. Next slide. So when you go through, just some considerations, ensure that you're in the entity overview, that your address matches the same information on your W-9. Ensure that you have a valid monitored email address on there so that any correspondence ensures that it's coming to the right person. And then ensure that you add the PRF reporting to your safe domain senders to ensure that it's not going to spam. And if any of the information is missing, again, an error message will populate, giving you the chance to go back, correct it, and save before moving on to the next step. Next slide. So Step 2 is going to be a subsidiary questionnaire. There are 4 required questions with 2 conditional questions that may display based on your answers to the first 4. Next slide. So this is not going to be relevant for all provider types, but if there are any subsidiary entities, that information needs to be entered through the next slide. Next slide. So depending on your answers selected from the first 4 questions, this may or may not populate for you. But if you do have a subsidiary, it will populate a table that is looking to collect information on any acquired or divested subsidiaries. Next slide. And this will be blank. It's going to ask for the period of reporting. So again, for this reporting period, we're talking about July 2020, July 1, 2020 through 12/31 of 2020. Next slide. And then again, the subsidiary information table is going to be shown only if the reporting entity selected yes, that there are subsidiaries that are eligible healthcare providers. Next slide. And just a note here that reporting entities must add all subsidiaries that meet the definition of eligible healthcare providers, even if there was no general distribution or payment to report on, and even if those subsidiaries did not receive a PRF payment. So regardless of whether they got any funding through this, if there's an eligible healthcare provider that is a subsidiary, it needs to be reported. Next slide. So these are just the steps on how you will add them into your reporting mechanism. Obviously, you'll need the tax ID number. And in the case where it might be a parent entity reporting on the general distribution payments, you will note that in this table as well. Next slide. And so then you'll be directed to step 4 once we complete the subsidiary. So this is payments to recipient. And so again, does the reporting entity have any subsidiaries that are eligible healthcare providers? And if any payments were made directly to those entities instead of to you, the parent entity. Next slide. And so here you can download a spreadsheet with all the payment information, and this is to assist users in reconciling the payment amounts for the reporting period. Download is recommended but not required. Next slide. And so the tables displayed on this page should summarize everything made in the time period with which it was made. This would include total nursing home infection control payments, if applicable, any other PRF payments, general distribution or targeted, and total rejected payments. If funds were received and you did not attest to them and return them to HHS, they should reflect in this section as well. Next slide. So the summary, again, it's going to have the TIN of the recipient, the distribution type, dollar amount deposited, dollar amount returned, if applicable, what was retained, and then the attestation date. This field, again, will be blank if the attestation was accepted by default and was not actively done within the HHS portal at the time. Next slide. Nursing home infection control payments are separate from general distribution. The usage of those is separate from the traditional HHS loss revenue and expense methodology. So they will populate differently from the other payments. Next slide. And so if any of the information that has pre-populated in is not accurate, portal users should select no and provide a description of where that information is inaccurate. And then next step would be to call, again, the provider support line to report and resolve the incorrect payment data so that you're reporting on the accurate financial information and financial incentive that you received from HHS in the relevant time period. Next slide. So once you provide those comments and click Save and Next, you will get the pop-up and you'll be able to proceed only once that is resolved. But if everything looks accurate, we'll move on to the next step. Next slide. So again, I know we've talked about this a million times, but you are only required to report if in that reporting period you received more than $10,000 in the aggregate. If your time period is not, this pop-up will display that you're not required to report, and you can click Save and Exit, and there's nothing further required of you for this reporting period. Next slide. So here we get into really the start of the first financial data. So the first piece of information that they're looking for is any interest earned on PRF payments, your tax information, and where applicable, single audit information. As a reminder, single audits are required for any entity that annually has received more than $750,000 in PRF payments. Next slide. So you will put the interest down, break it into two categories if you receive nursing home infection control, and then all other PRF payments are in their own category, up to 2 decimal points. And if no interest was received, you will need to enter 0 into the values for your payments. Next slide. And so your tax information, you'll select from a drop-down menu to describe your organization, LLC, C Corp, S Corp, to choose the one that best suits your type of entity. And then if none of the pre-populated fields are correct, you will select other and have to specify your designated business type as follows. Next slide. Next drop down, you'll put in your fiscal year end date that matches the month in which you guys report on your fiscal year financial data. Next slide. So as we stated, the single audit will only apply if more than $750,000 were received during their fiscal year. Putting in information relevant to that if that applies to your scenario. Next slide. Next up is our payment summary. And Erin, next slide. So again, this is going to be pre-populated based on your answers to previous questions and payments received. Again, if this is not correct, you'll need to go back to the previous section to resolve any discrepancy so that you're reporting on accurate data. And again, that's putting comments in, I think it was 2 steps ago, as well as calling the PRF hotline to report and resolve any discrepancies. Next slide. And here you'll put in other assistance received in the time period that you're reporting on. Next slide. So this would be things like if there were PPP funding, if any other SBA loans were received. So that information needs to be input into the field. Next slide. So it breaks it down into calendar year quarters. So again, back to our previous statement, we do not believe that this information populates into it if it's been previously reported. So you will need to match those submissions with anything that was submitted, if applicable, in your first period of reporting. Lori. Have you seen if it pre-populates into the system?
Sorry, I couldn't get off the mute. Yes, no, it does not pre-populate. You do have to enter those numbers, and it is my understanding you cannot put a 0 in any of the fields. You actually have to put a number in any of all of the fields to receive reporting. You can't just skip them.
Okay, Thank you. So again, critical to match whatever was in your phase 1 submission, reporting submission into whatever you're reporting now. Next slide. So again, we sort of talked through your other assistance received, SBA, FEMA, HHS CARES Act testing if applicable, any local, state, or tribal government assistance, any business insurance payments that were received during the applicable time period. Next slide. So, you know, if any errors show up or missing information, they will show up in red, and then it will also automatically calculate all of your entries by row and column. Next slide. So this goes back to HHS is treating nursing home infection control expenses differently than all other reimbursement. So if any funding for nursing home infection control was received, this is primarily justified just by expenses. There is no lost revenue justification for nursing home infection control. You have to report general and administrative expenses and healthcare related expenses. Next slide. And so if your entity did not receive any nursing home infection control, this page will be skipped. You guys will automatically be taken to step 9 for other PRF expenses. But if nursing home infection control was received, these are the slides that should populate for you to enter the data. Next slide. And so again, if you receive more than $500,000, it's requiring very specific data entry for your general and admin expenses and healthcare related expenses. Under 500,000, it's just 2 general categories for general, administrative, and healthcare expenses that have to be reported. Next slide. So that's what you're seeing here. It'll be a much smaller box if you're between $10,000 and $499,000. Next slide. Oh, next slide, I think that's a duplicate. So now we move into unreimbursed expenses attributable to coronavirus. So as we've talked about before, HRSA is first looking for justification to be in expenses. Lost revenue is the second component of that, but expenses do have to be reported. So they're going to be broken down into your general and administrative and healthcare related expenses. Next slide. And so here you are going to report on the net unreimbursed expenses that you can attribute to coronavirus. And Mike, do you want to talk a little bit about the methodology that we've seen most people use in terms of expenses and the salary?
Yeah, we've talked a couple of times that there was some clarification in the FAQs that came out in November that there was a pretty broad definition of applicable salaries, and we can go through the details of that later on, but it was basically all patient-facing staff and plus the administrative folks who administrate the response to the coronavirus in the first place, which left it a pretty broad. And yes, you had to take out the PPP period because you couldn't double count the time, but it did leave a long range of most of the staff of a practice, for example, applicable, which typically was basically the only thing that needed to justify the expenses one way or the other. So yes, that's typically been, you know, the method that we've been using has been kind of more carving off staff than the, you know, having to pick through individual staff to add in.
Okay, great. Next slide. And so depending on the data that you put in from your previous pages, the portal will then display one of two input slides where you will have to put in your actual patient care revenue. This is going to display if your expenses that you've reported are equal to or exceed the PRF payments that you were trying to justify in this reporting period. So let's say that your PRF payment for this reporting period was $25,000, and you put in expenses that account for $45,000. So you won't even have to get into the lost revenue questionnaire. You've offset everything through the expenses that you're reporting, and it'll now take you to the actual patient care revenue. Conversely, if you receive $25,000 and have only put in expenses that justify $15,000 of that, you're going to get to the lost revenue questionnaire. So next slide. So just a screenshot so you know what you're looking at. Actual patient care revenue, again, you've justified everything through expenses or your lost revenues questionnaire if you still have money that you need to account for. Next slide. So your lost revenues questionnaire, as a reminder, there are really three methodologies that HHS is allowing to justify your lost revenue. Option one is your 2019 actual revenue, the difference between patient care revenue using 2019 calendar year as the baseline versus what you saw in 2020. Option number two is 2020 budgeted revenue. This is if you had an approved budget prior to March 27th of 2020, using that versus your actual patient care revenues using 2019 calendar year quarters as the baseline again. And then an alternate reasonable methodology, which requires justification submission to HRSA as well. Mike, any comments on this before we move into the slide?
No, go for it.
Okay, next slide. And so if you choose option one using 2019 actual revenue, you'll get a page that looks like this. Next slide. And then option two, using your 2020 budget method, you'll see a page that will look like this. Obviously, if you guys are using this as a tool as you're going through the portal itself, you'll be able to print it out and probably see that text a little bit more clearly. Next slide. So, and then in addition to completing for the budget justification, your budget and actuals for total revenue net charges, you will need to upload additional documentation. A copy of the 2020 budget in one of the approved file formats, and an attestation by your CEO, CFO, or other similarly responsible individual regarding the accuracy of the budget that's submitted. Next slide. And then for the actual patient care revenue or lost revenue sections, you can upload any documentation using the green upload buttons as shown, will show on the next slide. And you guys can also download or remove previous uploaded documentation through the same process. In order to preview any documents, you will have to have the latest version of Adobe Acrobat Reader installed on your system. Next slide. So these are again, the green buttons that relate to uploading or downloading documents. If a data entry field has not been completed, has an invalid value, or if a required document is not uploaded in this section, again, you'll see a red error message that will direct you to correct the error prior to saving and moving on to the next slide. Next slide. So option three, using alternate reasonable methodology. This is the slide that will populate. And Aaron, next slide. So just a reminder, if we're selecting option three and choosing our own methodology, HRSA has noted that those submissions will face an increased likelihood of audit. HRSA will notify a reporting entity if their methodology is not reasonable. And if HRSA does make this determination, you will have to resubmit your report for that period within 30 days of notification using one of the other two methods, actual revenue or budgeted revenue. Again, this is why it's so critical that you ensure that HHS or HRSA is a safe sender, to make sure that your designated representative is getting any email that would include this information, particularly if you're using option 3. Next slide. So for supporting documentation, for a reasonable alternate methodology, you will have to submit a narrative document that describes the methodology, why it's reasonable, and a description of how you calculated your lost revenue. You will have to upload a document calculating those lost revenues, and then if desired, you have the ability to submit one additional supporting documentation file if there's something else that you believe makes your case. Again, we list out the file types that are accepted for upload. Next slide. So now we get into step 13, your PRF financial summary page. This is going to display pre-populated values that based on calculations from the data that you have entered throughout all of the financial components. Next slide. Next slide. So again, review that, make sure that everything looks accurate based on your submission. Again, you can go back to previous slides and correct any data if it is not populating correctly in the overall calculation. So now HRSA is going to start collecting some demographic data. So they're going to look for personnel, patient, and facility metrics. There are 3 tabs that are in there that capture different metrics. But HRSA notes that all cells are required, you're restricted to 8 digits with no decimals, and everything must be a positive value. You can move between the tabs and tables in this input section without losing data, but you can't move to a previous section or move on until it's fully completed. Next slide. So personnel metrics are going to be looking for, in the time period that you're reporting on, the total number of people employed for your clinical and non-clinical staff by quarter. It's going to include metrics for personnel for calendar year 2019 through the end of the period of availability on the funds that you're reporting. So again, this is taking us through the end of 2020. And personnel numbers should be reported whether or not they were used in your justification for the PRF payment. So it's looking for all employees in those particular time period. Next slide. So this is just a snippet. You can see the red outline there that delineates the 3 separate tabs that you'll toggle between to complete all of the fields. Next slide. So your personnel, clinical, non-clinical staff, full-time versus part-time, contractor, furloughed, separated, or hired in the applicable time period. Next slide. Your patient metrics, comprised of 1 table in the figure below. Next slide. And so this is not all fields are going to apply to every facility type, but it's looking for inpatient admissions, outpatient visits, in-person and virtual. And obviously for physician practices, that's going to be where the data is really going to be reported. And then emergency visits and facility stays for long and short-term residential facilities. Next slide. And then facility metrics, so it'll start with one question. Does the reporting entity or its subsidiaries operate or support staffed beds? Obviously, physician practices, that's going to be a no. For hospital facilities, that's going to be a yes. So if you answer yes, it will populate additional questions. If you answer no, you've completed that section and can move, hit save and move to the next section. Next slide. So if you do have staff beds, again, this is what's going to pop up. Next slide. And they're looking for data on your med surgical beds, critical care beds, and then any other beds that you're operating within the facility. Next slide. Finally, survey. This is the last data entry page in the report, and HRSA and HHS are using this to evaluate the impact of PRF payments on your financial and clinical care situation during the period that you are reporting on. So it's going to ask questions on the financial effects of the PRF payments and the clinical care effects. It's mostly a yes and no, where you'll strongly agree, be neutral to, disagree, or strongly disagree. Those are the options. It's not a free text field. Next slide. So this is how the financial effects will populate. Next slide. And there will be a similar field for the clinical effects. So now we get to review and submit. You have entered all your data, you've gone back and quality checked it all. Important to do that step, because once you hit submit, you are no longer able to edit the report. Next slide. So you'll receive a couple additional questions. So for entities that have a rural health clinic, it's going to ask, did you report on the use of your RHC COVID-19 testing funds in the RHC portal? And we'll select yes or no from the drop-down list. If you select no, it will prompt you to go back and correct previous submission. If you hit yes, you can move forward and click the submit button. Next slide. So if the data is correct and you click the blue submit button, a pop-up message will appear giving you one last chance prior to submission. Again, can't correct anything once that submission button has been clicked. So one final pop-up. If everything looks good, go ahead to submit, click that blue button. Next slide. So once it's submitted, a pop-up will appear confirming that the submission was made as shown in the figure below. So reporting successful. Next slide. Once the report is submitted, you should receive a confirmation email, again from this email, critical that it's in your safe sender list. If any of the following apply based on your submission, additional information will also be provided in that email. First is additional PRF payments and other payment received period. So for instance, phase 4 distributions that we're just seeing now, ARP rural that we're just seeing now, that should all be reflected as future reporting that will need to be completed in a future period. If applicable, if you've used the RHC COVID-19 testing program, and then if they're unused PRF payments from the payment received period. So this is if you have not justified the complete use of anything received in this period, it will note that on this submission email. Next slide. So little screenshot of what that confirmation email will look like. Next slide. Okay. So that is the process. So what questions do we have?
Well, one point of note is that obviously the PowerPoint is going to go on our website like all the rest of them have. If anybody wants it, glad to send out to it, because she drafted it as much as a guide to sit next to you while you're doing your inputs as it is a presentation. And so glad to distribute it to whoever wants it as well. Questions?
So from anyone who submitted in the first period, any tips or tricks or guidance from that reporting submission?
I don't see any hands raised, and there's nothing in the chat right now, but if you do want to speak up, raise your hand. I will unmute your microphone, or if you wish to drop it in the chat, you can do so right now.
Well, we appreciate everybody's time today, and wish everybody luck on this next round of submission.
Thank y'all. We appreciate it.
Alrighty, and like Mike and Kelly both said, we will be uploading this to our website, which is shpllc.com/webinars. You'll be able to download the slide deck as well as a copy of today's recording. Everybody have a wonderful day.
Thank you.